Good morning, everyone, and welcome to today's webinar about what you need to do after you've submitted your customs declaration, brought to you by the Institute of Export and International Trade. My name is William Barnes-Graham, the Senior Content Editor at the Institute, and I will be your host for this morning. And on the next slide, you'll see that it is my delight to welcome our speaker today in Rob Booth. Hi, Rob, how are you today?
Hi, Will. I'm very good, thanks. You okay?
Very good, thank you. And yeah, looking forward to what should be a really interesting webinar, I am sure. But on the next slide, you'll see that we are going to be running a quick poll to find out a little bit more about you, our audience, and how aware you are of any compliance requirements you may have after submitting declarations. I'm going to launch that poll now. The options ranging from very aware to not sure. Just realised I missed a bit in the script where I say who Rob is. Rob is a customs and trade specialist at the Institute with lots of experience both within and supporting businesses in the international trade arena. You'll be able to read more about him in the slide pack, which we'll be sharing with you after this webinar. But just a couple more housekeeping notes. Firstly, you can contact me with any comments or questions using the question panel on the control window to the right-hand side of your screen. We hope to get to a number of your questions today, but please note we cannot guarantee we will get to every question in the allocated time. A quick tip though, if your questions are concise and easy for me to read, I am more likely to read them. Secondly, as just noted, you will receive access to today's slide pack, as well as a recording of the webinar in a follow-up email we will be sending over the next day or so. So please do try to listen in as carefully as you can to the presentation. And finally, a heads up, we've got a lot to get through today, so we'll probably be running a full hour in terms of the webinar, despite it being billed as a 45 minutes session. The recording will be there for you to watch back though if you do need to leave earlier. Right, so I'll give you a couple more seconds to answer the poll, and I will now show results in 3, 2, 1. Righto, so just looking at the results, so 15% of you are very aware, 47% of you quite aware. So a majority of you have some level of awareness. About 30% of you not aware, and then 7% of you not sure. Rob, any surprises there with the response to that poll?
No, I think that's probably fair and expected. I think we've seen in the last 18 months a lot of communications around new customs processes and opportunities to streamline following the departure from the EU. So it's very much about embracing those new compliance obligations, and I think where specific opportunities have been explored, perhaps that's where that greater knowledge will come from.
Great, thanks Rob. And well, hopefully today's webinar will also help to increase a bit more awareness of those requirements. But I'm going to hide the poll results and hand over to you, Rob, on the next slide for the presentation. So over to you.
Cool, thank you, Will. And good morning, everyone. Welcome, thank you for joining. So we're going to look through some really important topics around the data requirements and your obligations once your customs declaration has been submitted, and we'll have a look at a few of the different scenarios as well. There's kind of standard operations, standard procedures, and then there are those duty relief schemes and special customs procedures as well that we can consider. So let's start from the beginning then. When we are interacting with customs authorities, it's normally through a third party. We'll have a customs intermediary that works on our behalf. So we appoint these customs intermediaries to carry out our customs clearance activities, present perhaps documentation to the authorities to support the clearance process, be it export or import, and help you ultimately fulfill your legal obligations when you export or import your goods. So this could be through a variety of different parties, whether it's customs brokers offering an individual service, or through freight forwarders, perhaps with larger consignments offering that end-to-end service, and they have their in-house team supporting customs clearance, and of course fast parcel operators moving smaller parcels, perhaps quicker delivery service door to door. Now, within those arrangements, though, there will be some legal basis for that service to be carried out. And so the representation is the really important concept we need to be familiar with, because this will then highlight the legal obligations and the scope of liabilities if there are any issues or any errors or omissions in those customs declarations that are submitted on your behalf. So there's two types of representation. Other than companies who may self-represent and submit customs declarations themselves, but we have direct and indirect representation. And direct representation is perhaps adopted by most intermediaries, and it's quite commonly observed in most relationships. But this is where the trader ultimately still holds that full liability. So any issues, any customs debt arising for any declarations, they're responsible for the payment, and any discrepancies need to be corrected. It is down to the trader to take that corrective action. Indirect would lead to a situation where that liability is actually shared, and so it's a greater risk for the intermediary offering those services, and perhaps they're a bit more invested in that process and ensuring that the data and the supporting documentation is all in place in good time, ready for that customs clearance to go through when necessary. So when appointing your customs broker or your forwarder to carry out your customs clearance activities, there will be some form of authorization formally captured, and it will refer to the type of representation, but also your company details, your IOE number, for example. And this will be in accordance with the legislation stated here. So this is new legislation introduced to ensure that legal representation is fully captured in law, and details the full scope of those liabilities. That will be referenced also on any letter of authorization, or at least it should be. And so with the letters of empowerment or power of attorney or authorization letter, you are giving them permission to act on your behalf and carry out that customs clearance process. It could be that this is done on an annual basis, and you actually include that issuing of authorization as part of an annual exercise to review your intermediaries, your brokers, your agents who are in the scope of activities, and ensure that you've got that full visibility so you know who's representing you for your customs activity. And part of that annual process, that exercise to review agents and brokers in scope, may also include establishing the service levels, the timings involved, the people involved in requesting information or providing evidence of customs clearance taking place, those general operating procedures to ensure that there's no gaps, and any issues that may arise or the need for escalation to address any issues. You've got contact details. All of this can be captured in those agreements that are more formalized. And very importantly, the provision of instructions should also be captured in any agreement so that the information that's provided can be confirmed formally in writing, especially if you are adopting special procedures, which we'll explore a bit later, because the data requirements will change and look a bit different from your standard customs procedures. But those instructions, big part of any export or import process through customs clearance. So all of that can be captured in that annual exercise. And ultimately, that information that is declared, it will need to be accurate. It is down to the importer or the exporter record to provide that information as accurately as possible. And so instructions are a good way of capturing all that in one place. And Incoterms will of course have the role of determining who has that responsibility as well to deal with the customs intermediary, whether it's someone that you appoint yourself as you're in control of the movement of those goods, or perhaps you're bringing goods into the UK and you need to work with your supplier's preferred broker in the UK. But either way, there needs to be that formalization around that relationship. Okay. So when it comes to those declarations, then there will be some element of customs debt that's created, and there's an assessment on duties and taxes, and then those liabilities will need to be paid. And so when we have our imports, customs duty, perhaps excise duty, import VAT will all need to be paid by some method. But if that does go wrong because of perhaps incorrect data has been declared on the customs declaration initially, perhaps you did provide instruction that wasn't followed, or there was a gap in the instruction, or the supplier's paperwork was missing information like country of origin, for example. Who is responsible there then? So this is where it comes back to that issue around representation, and ultimately direct representation is likely to be in play for most arrangements, but that party stated as the importer, they are going to have that liability. So just make sure you've got that visibility on the authorization and what the relationship looks like. But once that is established, who takes the corrective action can then be determined. So you can make your post-clearance amendments where you can correct any discrepancies, and there will be a different process, whether it's for an export, for an import where there's been an underpayment of duty and VAT due to an error, or perhaps there's been an overpayment. And I'm sure that with any overpayments, HMRC will be very glad to hear about these overpayments. But overall, we're all working towards that positive customs profile. So efforts to put these right as quickly as possible will go a long way to improving that customs profile overall. And of course, when you have a declaration submitted, there will be documentary evidence to support any of these scenarios. So if there is an overpayment and it's justified because the commodity code was incorrectly stated, and so you were subject to a higher rate of customs duty, you should have your own documentary evidence that confirms what the actual commodity code should have been, actually. So let's have a look at exports and then imports individually. So in terms of data and documentation, VAT is very important, big consideration for exports. We're zero rating our VAT on exports, but it's subject to certain evidence and criteria being met. So HMRC can collect VAT if those conditions aren't met. Incoterms is really important here because access to proof of export might be difficult depending on the use of certain Incoterms. So when we have the likes of XWorks or FCA, there may be some challenges there where access to proof of export is difficult. The buyer ultimately is contracting for carriage, so the exporter does have little control over access to those documents, and so contracts of carriage, the transport documentation, it may be that it takes quite a bit of time to get access to it, or perhaps not at all. So that leaves exporters potentially exposed because they can't meet their VAT obligations when zero rating. So before zero rating a supply and releasing those goods to customers, it should be captured in a formal way how the evidence is going to be provided, and the nominated freight forwarders or carriers are going to be able to provide that information to you. So this is something that can be managed before the goods are even released. So we've got to just make sure if we are involved in those types of scenarios, we've got that visibility and we know when and how that information is going to be provided. Then you have that reassurance about meeting those VAT obligations. So requirements then for zero rating VAT, all evidence must be retained for 6 years. Any supporting documentation for that export transaction. HMRC could inspect at any time and would expect that information to be readily available. So we have to be preparing those documentation packs for the consignment, have them ready should there be a request made to review those. And ultimately those goods physically must leave the UK within 12 weeks. So back to the point around Incoterms, if you don't have that visibility and control over the freight and the movement out of the UK, how will you know that that can be met? There is potentially the risk of consolidation with other consignments, potentially under an XWorks scenario. And so will that actually happen within 12 weeks? So going back to that initial stage, very early on in the transaction, having that confirmed, formally captured in some way, you're more confident that you can then meet that obligation. Paper records, there's obviously been some developments in the last couple of years around easements because of COVID and access to paper documents, and more adoption of electronic documentation. But you should retain those records where you can, unless there is an approved system in there that HMRC have had visibility of. An HMRC can retrospectively request VAT to be paid on shipments without proof of export or delivery. If you do ultimately get access to those documents, at least proving receipt of that cargo, it may help reduce penalties, perhaps if they are issued on top of that VAT. So it may reduce that financial burden, but ultimately we're going to be operating with that expectation in mind for every single shipment. You can make use of the MSS reports, so the management support system reports that HMRC provide, and they will give you some details of all export movements, everything that's been declared under your IOE&IT, and this will give you details of the parties involved in customs clearance as well. So that may help reduce a bit of time in chasing the brokers or the intermediaries and obtaining that information and identifying other parties that can help with providing further proof of export. So when it comes to HMRC then, they want to ensure that the documentary evidence and all the data is there that will confirm who is sending and receiving those goods, who's making declarations, the values involved, licenses, the types of packaging and weight. So we've got to make sure that the evidence that's provided does actually include the right data. So we'll just break some of those down into more detail very shortly. So it may be that you can obtain the evidence you think is sufficient, but it might be missing certain key points. Method of freight as well, that could be really crucial. So we're going to make sure that we're not just obtaining it, we've got an established process that demonstrates you are being diligent, you are asking the right questions, and you're building in controls, especially where certain Incoterms are being used. So types of evidence then. So under proof of export obligations, we've got different levels. So we've got official evidence, and we have commercial evidence. So official evidence could be what you would find generated from chief. So your customs declaration and your goods departure message. Once the goods physically have left the UK, this will be generated, confirming that those goods have indeed been exported. So official evidence, very good, very useful. You can obtain both of those. But then you have commercial evidence as well. So this is where you have your proof of contract of carriage. So transport documents, various types depending on the method of freight. But importantly, both could be considered of equal standing, but additional supplementary evidence will be necessary. As I say, there's certain key data there that has to be present, and that's what HMRC are looking for. There is a very helpful notice 703, which does confirm a lot of this requirement in much more detail, but we will provide in copies of these slides that also expand on the specific data that is expected as well. Okay, so look out for that. But that's supplementary evidence. So all this type of information and documentation is going to be necessary to support that proof of export obligation. So it's really from end to end, and so this highlights a lot of those key requirements, even things like insurance and freight charges, policies around insurance. Perhaps insurance costs are, or the premium for insurance is apportioned per shipment. So demonstrating how that calculation is done is going to be really important, because you might have that calculation instructed, so each broker for each shipment. So make sure you've got access to that information. Freight charges, of course, with your partners there. Evidence of payment, of course, and receipt, so proof of delivery as well, is going to go a long way to supporting the official or commercial evidence as well. Okay, Now, for imports, there's a lot of that information that we'll be looking to capture. But in addition, because of the requirement around payment of duties and taxes, those financial liabilities are created for imports. And so the duty calculation could be affected by, or will be affected by the commodity code, country of origin, and ultimately the customs value. So we've got to rely on the suppliers providing this information to a big extent. So can we trust that information? Do we understand their level of competence in determining the commodity code, for example? Do they know the country of origin for their goods? Are they aware of preferential treatment that may attract? And ultimately, when it comes to customs value, there are some legal principles we need to follow, and this ultimately depends on the nature of the transaction. So whether it is based on a sale taking place between the two parties, or is it a different type of transaction that doesn't involve a sale? Perhaps it's a movement of goods where there's no commercial value. So we've got to adopt these legal principles so that the assessment can be done correctly, and ultimately, to do this in the right way, the right customs procedure must then be adopted. So if duties and taxes shouldn't be paid, the valuation method is going to support that process. I mentioned preferential origin, so that additional supporting evidence, this is going to be expected to be provided. It may not necessarily be inspected at import. It may follow in an audit, and we'll come back to that one a bit later. But it depends on where the goods have come from, which country the goods have been exported from. So it could be an EUR1 movement certificate for high value goods, or it might be a statement of origin on the commercial invoice for goods from the EU under the terms of the TCA, or perhaps a GSP Form A certificate for those developing nations where you brought in materials for manufacturing. So all of that type of documentation would need to be available on request. And then for the kind of less standard type goods, controlled goods, where there's that they are controlled because of the risk they may pose to us, to the environment, to animals, there's going to be perhaps licenses, additional certificates, food products, health controls applying there, endangered species. All of these will need to be present, and for some of these controlled goods, it's likely that there's going to be a more likely chance that those documents need to be presented at import. And actually, it's not an audit check, it's going to be at import, and it's going to be assigned a routing where it's subject to those documentary checks before clearance can even take place. And also just mention around excise duty, there's additional systems and considerations there depending on the nature of the product. So these types of goods, alcohol, tobacco, hydrocarbon oils, will be subject to excise duty on top. So there needs to be the monitoring of the movement and that additional reporting once customs clearance has taken place to advise those goods have been received in a designated excise environment, or perhaps they've departed that excise warehouse, for example. Okay, so let's have a look at the record keeping and the potential for amending declarations and what kind of data is required there. So it's quite difficult to keep good records ultimately if you don't obtain the necessary evidence. We've highlighted some of the official types of evidence, so the customs declaration, but there are scenarios where you don't get access to this. Perhaps the document hasn't been released by the broker. Perhaps you haven't formalized that arrangement enough to ensure that you get a copy as soon as the clearance has taken place, because you want that visibility as soon as possible. So if there's corrective actions required, you've got what you need to have a look at and compare with your commercial paperwork as well. Going back to last year when we had the easement on EU imports and delaying the declaration over a longer period of time than usual, perhaps you've received those goods, but then no customs declaration was actually made available. Perhaps it wasn't even submitted. So that's something that a lot of traders have experienced, unfortunately, where goods just arrived, they moved through, there was very little in terms of customs control, but then the customs declaration should have followed within the 175 days. but also the issue around transport documentation and that commercial evidence as well. Perhaps you're not in control of that freight. So if you've got no direct relationship there or no formal process around coordinating the documentation and its release, then that's going to be a big challenge, especially for those exports and meeting proof of export requirements. So how can we look past this? And I mentioned formalising the arrangements with the brokers and perhaps also with any additional parties where you've got that access to certain forms of evidence. But an internal compliance program will be very helpful in ensuring that you've got not only your internal expectations documented and captured in those procedures, but you've got an external validation as well to confirm that, yes, this is actually going to help mitigate that risk, and you're going to have access to that evidence that you need to meet your VAT obligations, or to check the right amount of duty has been paid, or the goods have been classified in the right way. So that's something that we would strongly recommend that you explore and implement in the company, because then it's not just your perception of being compliant, you've got that external validation as well. The MSS reports I mentioned, very helpful for reconciliation against your own records, but not the definitive answer for assessing what's being declared, because ultimately it's only going to tell you what's been declared against the IORI. You may have your own records that show that 10 extra consignments arrived in the last 6 months, but there's no corresponding customs declaration. So who was responsible? Have they submitted anything? Is that missing from your records? Has it even been submitted? And working with those intermediaries, the brokers, the agents, forwarders, they can provide lots of useful insights on what happened on the movements, perhaps identifying customs routing where those additional documentary checks have been required, can explain a lot of the delays perhaps that would result in, but they can definitely provide some very useful intelligence on those movements. And also looking perhaps more longer term, to help with formalising these processes internally and identifying what it is HMRC are really focusing on, what they deem to be high risk. The self-assessment questionnaire that is available for those considering the AEO accreditation. So this deemed best practice will look at areas such as classification and record keeping and how you arrive at your customs value, and this will focus attention on those priority areas. So access to customs declarations will be part of that. So how do we get that access? So it just helps focus on the priority areas. Okay. So with the customs declaration, then should be a big part, central part of any record keeping. Hopefully you are receiving these from your intermediaries as soon as they've been submitted, and you want to be able to then retain those with your supporting evidence for 6 years, should they be required for any further checks by HMRC. But to supplement that, the MSS reports, really helpful to capture what's happening as a summary against your IORI. But for exports, imports, slightly different information. Imports, we have that financial implication for duty and VAT. So we want to have that summary document, the entry acceptance advice, so we can identify at the item level in a lot of detail what's been declared, what are those values, are there any discrepancies there with VAT calculations, for example. Your brokers should, I expect, have their own compliance considerations. Perhaps they are AEO accredited, and so they'll have some fairly robust procedures around maintaining records themselves, but access to them might be difficult, and getting your copies as quickly as possible is paramount, because the longer it goes on after the event has taken place, perhaps it's going to be more difficult to get that access. Something we definitely observed, in the last couple of years with COVID and limited access to premises, to physical documentation, archiving, etc. But the quicker we've got access, the quicker we can take corrective action. We can do those checks, and we can spot those errors and report them as necessary. And then formalising those arrangements, as I say, that letter of empowerment for representation, we want that visibility. It could be part of an annual exercise. It could be even less time than that. It could be every 6 months. But having that visibility, you know who you're working with, avoiding any issues before they happen. And then perhaps where you have your payments of duties and taxes covered by a duty deferment account, you can provide standing authorization to your brokers, so they're not having to request each and every time. This way, you're trusting them to use that correctly, but this should be part of a formal arrangement. And then with archiving your documents, ultimately you want to make sure that once we have them, we've got that access. They need to be accurate, up to date, legible, readily accessible as well. So ideally you have a central repository that captures all that documentation in one place, and there is a kind of key unique reference that's going to be able to link those documents together, so the audit trail is quite clear. And that would mean that they would then be pretty good for any inspection at any time. When you've got some special customs procedures adopted, which we'll go through a bit later, you're going to have to also consider access for any checks that are carried out off-site, perhaps, and that audit work that could be carried out. And that could be on quite a regular basis, so you can identify the timings. But we need to be considering that. Backup, disaster recovery systems, making sure there's contingency there, and the computer systems that are in scope as well, making sure that that's all part of any annual audit, cybersecurity risks, that kind of thing, making sure it's all up to spec. And there will be much benefit in advising HMRC where you have any proposed system changes. There may be some constructive conversations that you can have and explore, just to ensure that once that transition happens, you're still meeting the conditions of a special customs procedure, for example.
Thanks, Rob. I think I'm just conscious of time, so I think this slide people may be able to look at, the penalty side, people can look at it in the slide pack afterwards, because I think it's relatively self-explanatory. But if we move to the next slide, we'll just do a quick poll and ask a few questions from the audience, because we have had quite a few come through. But here in this poll, we're just asking you how confident you are that you've kept clear and detailed records of your imports and exports over the last 6 years. Just while people are answering that poll. So what I'm going to do, everyone, is I'm going to try and group questions together where possible, because we've had about 30, 40 questions come through already. So we're not going to be able to go into every specific one. But a few people have been asking, to what extent can you use MSS data in place of getting the documentary evidence for proof of exports? I think Lorraine and Anne have both asked questions similar to that. So yeah, to what extent can you use just MSS data?
So it shouldn't only be used as proof of export or any activity. Ultimately, there it's a tool to check what's been declared against your IORI. So it's to supplement your commercial evidence. Still recommend obtaining those customs declarations so you get a full the full visibility of what's been declared, because those MSS reports are a summary of the activity. It doesn't include all the data that's been declared. Definitely use it as a starting point, helps with reconciliation against those documents, but not to be used just on its own though. It's to support other documentation that you still need access to.
Thanks, Rob. And a few people have asked, Yvonne and Helen, for example, have asked, how do you get onto MSS? How do you access it?
So at the moment, it's a fairly kind of offline process, but you would apply to HMRC. It's a subscription-based report, so you can sign up to that for a year, and the standard report that you can obtain could give you insights into your import activity at item level, export activity at item level, and also reports on your tax and duty liabilities as well. And then you'll receive an Excel document once a month, usually within the first week at the start of the month. So it's not always going to be in real time. So that's why still getting access to your customs declarations might be quicker. But for that summary to support, say, your monthly reconciliation activities, you can then embed that into that process.
Thanks, Rob. We'll do two more quick fire questions. A few people, including Paul, have asked to what extent is MSS data available on CDS now, bearing in mind the chief to CDS migration?
Yeah, I mean, it's a very, very pertinent question, and functionality on CDS will greatly improve the trader experience in interacting with their customs activity and the data associated with that. The dashboard and the access you get through the government gateway account will eventually lead to, I suppose, a more real-time reporting ability, and so we'll provide information in a slightly different way to how it is now. As I say, it's a subscription-based service, a monthly document that's provided by HMRC, so much more intuitive and user-friendly access from CDS. But we've not seen that functionality yet. It is early days. We've still not even got onto the full transition for imports that we're expecting to see from October the 1st.
Thanks, Rob. I'm actually going to park questions there for now because there's a fair bit still to get through, but there's the response, everyone. Thank you for responding. Good to see that just shy of 75% of you are either very or quite confident. 21% of you not very or not at all confident. Hopefully, again, this webinar will help, but obviously do feel free to make use of the IOE services and support if you need any further support after this webinar. But plenty to get through, so back to you, Rob, for the rest of the presentation.
Cool, thank you, Will. Okay, so in fairly standard scenarios, we've looked at some considerations there, and we will follow up with some more guidance around the data. But there are other scenarios which are kind of less standard, and the data requirements will look slightly different. When and how you provide that information is going to be crucial to ensure that you can meet the obligations of using those alternative customs procedures. So whether it's a duty relief scheme or a special customs procedure. So let's have a look at how that may look. So if you have goods that are being returned to GB, perhaps because they've been rejected, and this could be for a number of reasons. The products are missing some essential markings or information. The customs formality itself, the declaration at import, threw up a few issues and challenges, and it couldn't be cleared. So ultimately, it has to be returned or potentially even destroyed. But let's focus on those goods being returned. Or there may be even a perceived risk around the quality concerns as well, and especially if you're looking at for example, food products, there could be that scenario where those goods have to be returned. So what then happens, and how does that impact our data requirements? So you still have a usual customs declaration requirement to fulfill. So it's still subject to the usual requirements. You'd still need to check if those goods are, if they're controlled, are additional licenses and permissions, certificates, are they going to be required as well, as it's still a usual process, despite them being returned to GB. Now, in some cases, though, they could actually be eligible for duty and VAT relief. So if we consider all the information we've discussed so far, if the goods have been exported, we've got access to information, key data, our supporting evidence for VAT, we've got access to customs declarations, most importantly, is going to be really helpful where those goods are eligible for duty and potentially VAT relief as well. So return goods relief is a form of a duty relief scheme. So this is available on an ad hoc basis. So individual shipments, you could benefit from this. So you can obtain duty relief on those goods that are being re-imported. We just discussed some of those particular scenarios. Where those goods have been exported from the UK, or perhaps they've been moved from NI or EU to GB and then being returned to NI. Specific scenarios where these goods could be eligible would include temporary exports, where an ATA carnet has been used, or CPD carnet for vehicles. Goods that moved out under the outward processing customs special procedure, perhaps they remain unprocessed when they come back to the GB, and so they're in the same state as they were when originally exported. Personal effects that come back into transport, and anything that's been hired out, leased or loaned outside the UK, any professional commercial equipment, they would all be eligible for return goods relief. So it can be done in the usual way for a customs declaration. Then when it comes to that declaration actually benefiting from this, it's all about the customs procedure code being included on the declaration. And then it's all about meeting the individual conditions. So if you've had goods that were in those types of scenarios, then it could be they're eligible for the RGR treatment. As I say, it's ad hoc. There's no formal authorization with HMRC, but we need to consider the fact that the scope of this covers goods that were exported within the last 3 years. It can be permitted over a longer period of time, but only in exceptional circumstances. There can't be any alterations or modifications to those products other than kind of general maintenance for its upkeep. They should have been in free circulation when originally exported, unless they were actually originally declared to an inward processing or end use special customs procedure. They shouldn't have been exported to be repaired or processed. That would actually fall under a more formal customs special procedure, and we'll come on to that in a moment. And the key to making this work is really the access to information. So I mentioned the export customs declaration from the original export. That's going to be used as a kind of link with this return. So that import customs declaration should carry a reference to that original export. And depending on whether it's an entry into Chief or into CDS, there will be a CPC to highlight this duty relief scheme is going to be used, and that export declaration reference should then be included. And for goods that obviously have been not exported but moved to the EU from GB prior to January last year, there are other arrangements there, because obviously there was no export, there was no customs declaration, so other commercial information can be used instead, but the timescale will still apply, and you do actually only have a couple of months to actually get those goods back into GB under this particular duty relief scheme. Now that covers duty, so the goods can come back free of customs duty. Of course, we've got to consider whether there's 0% duty anyway on those products, and it might not be worth exploring this, but if there is, then it's worth considering. But to get the VAT relief as well, this would only be available where the importer is the same party as the original exporter of the goods. So perhaps in this scenario, if you've got the same broker and forwarder involved in the transaction, involved in moving those goods, they're going to have access to this information. So don't rely on that. You still want to hold your own records and of the original export, so make sure you've got access to it. Well, that will then help you benefit from this, and it will save paying that duty and potentially the VAT on those movements as well back to the UK. Okay, so that was a duty relief scheme. So there's several hundred duty relief schemes beyond return goods relief, but this is quite a common one that's used for those items that come back to the UK. This can obviously help with any formal returns policy, but it does rely on that careful instruction and coordination of the information to your brokers and forwarders, whoever's involved in clearing those goods. So let's now have a look at customs special procedures. So this is where we have a more formal approach to benefiting from duty relief or suspension of duty. And they quite often result in a full authorization from HMRC. But when you do apply for these, you are expected to provide a lot of detail around the movement of your exports and imports, especially those that are going to benefit from the custom special procedure. There's a lot of benefits there for cash flow because you're not having to pay any duty, perhaps at import. It may be suspended for an indefinite period, depending on the nature of the special procedures adopted. But when applying for these, you're going to need to have access to a lot of your data items that we've discussed already. Access to customs declaration is going to be crucial. So embedding that formal checking process and due diligence is going to be a big part of the application. It's a pretty strict application process, can take a bit of time, but that good history of compliance is central to it. Operating procedures should be well documented, capturing what's happening at every stage of the movement, so you're able to demonstrate that you can control the movement of these goods, because ultimately you are delaying the payment of potential liabilities, so there has to be a formalized set of due diligence underneath this. And quite importantly, those operating the procedures and communicating requirements to brokers where it will affect the customs declaration data, they need to be competent in managing that process and familiar with the obligations. So there's different custom special procedures. Ultimately, it depends on the nature of your business and what you're involved in, and there is a special procedure there to account for most kind of common business models. But we have several key ones here, just going to highlight very quickly. With inward processing, it's all about bringing goods into the UK for further processing or perhaps final manufacture of a product or even repair. What it then allows you to do is suspend the payment of any duties when they arrive until that processing is complete and either the goods are re-exported, so liabilities are discharged, or they can be released to the UK market. And this is a really important one to think about if you're involved in manufacturing, because the finished products may actually attract a lower rate of duty than component parts that are brought in. And so that's actually very useful, and this does account for that scenario. And so there could actually be a really positive duty benefit there based on the finished product. Then we have outward processing, so goods exported to a third country for processing or repair. And there is the opportunity to get either a partial or full relief from duty when those goods come back to the UK. The extent of that relief could depend on the nature of the warranty, whether that's included in the products as standard or it's actually paid as extra. But any valuation is determined on the cost of repairs or processing rather than the product itself. Then we have authorized use, so used by some industries where there's specific forms of manufacturing or processing that occurs using imported materials, and once that process is complete, the liabilities can be discharged. So this could be for shipbuilding, civil aircraft, food processing. There's a few sectors there that can benefit from this, and so it really does account for that level of manufacturing that occurs in the UK and offering that cash flow benefit. But additional reporting is required to notify the authorities once that process is complete. There is then temporary admission, so any items brought into the UK or into GB on a temporary basis for up to 2 years, but for a specific use. So it could be for demonstration and exhibition, demonstration equipment, tools perhaps, and they must be re-exported within that 2-year period. And then customs warehousing enables the storage of goods under duty suspension. They are subject to minimal forms of handling, so no changes really permitted, no modifications, but they can be stored there under duty suspension for an undefined period of time. So for finished products brought in from outside of the UK to then be re-exported again, really helps with cash flow, avoid paying those duties and VAT at import when it's unnecessary, really, but obviously it depends on the particular tariffs those products are subject to. But for finished goods, consumer goods, it's utilised a lot by companies looking to help with cash flow and just free up a bit of cash. But of course, when we consider all these, what are the tariffs? If they're 0%, it's going to be little impact, but you've really got to assess that very carefully. Now, when we've considered some of these special procedures, there is a couple of options there. Either it's a full authorization, or it can actually be an authorization through the individual customs declaration. And so this is where the CPC that's used and adopted in the customs entry will actually represent an application. So there will be an assessment of the activity, but ultimately for a full authorization, you have your customs supervising officers who will monitor the activity and ensure that you're meeting your obligations under that authorization. They'll also provide a central contact point as well for any queries you've got on any activity covered by that special procedure. They'll coordinate any efforts around auditing, so checking activity against customs declarations. So again, very important role to play there in confirming what information has been declared. Then also oversee the authorization itself, so perhaps changing some of the criteria. Perhaps there's increased risk on the movement of certain products from certain suppliers, and so it needs to maybe tighten up the arrangements. They'd also help with invalidating those customs declarations. Perhaps where information has been declared incorrectly, they can support with that and liaise with the national clearing hub. And also where any amendments are made because discrepancies have been observed, they can also support on those checks as well. And finally, where you have specific processes that involve reporting to advise you've done your processing, it's now complete, you're meeting the terms of your authorization, they will work with those teams that manage the bills of discharge or the pods to ensure that that is flowing to the right people. There will be references made to the customs supervising officers on your customs declaration. So currently with chief declarations, box 44 will include references to those locations. So depending on the nature of the special procedure, it'll be a different supervising office. Overall compliance, it does go a bit further than your standard customs declaration. Ultimately, you've got very specific terms and conditions to meet for your process. You'll have an authorization letter, which will detail the scope of that authorization. You've got to be able to advise where those goods are at any time. So you've got to be able to identify them in the location where goods are stored. Perhaps there's going to be dedicated areas or enclosed casing or coloured labels identifying different types of goods. For example, those under duty suspension in a customs warehouse, they may need to be segregated from those that are not under duty suspension. The bills of discharge ultimately will close the procedure for each transaction in some cases, especially if we're looking at the authorised use. And then we have payment of duties and taxes when released to free circulation. So depending on the level of the authorization, whether it covers goods being sold into the UK market or they're going to be re-exported, there needs to be that visibility. You've got to be able to assess duties and taxes in advance, because ultimately you want to provide that information in the application. And finally, we can't escape it, those formal written processes and procedures, those standard operating procedures, they have a central role to play in ensuring that everyone knows their role to play within the company and then what the obligations are when it comes to reporting on the activity. Along with that, the record keeping, which those SOPs will undoubtedly refer to, but how you obtain that information, how you instruct your brokers to provide certain information at certain times, if there's any issues around the supply chain, how you mitigate against those potential risks, changing suppliers, that access and traceability is really important. Identifying the goods, within the premises. Perhaps it's been approved under customs warehousing, for example, and equivalent. So where similar products are involved in the re-export of imported products subject to processing, full traceability there. And it could involve as well a significant investment in software that's dedicated to manage the duty implications as well, because there could be some direct communication with HMRC systems like Chief and potentially with CDS. And ultimately that supply chain traceability, which will come down to customs declarations, goods receipts, inventory control, and records of payment, proof of receipt of payment, going to be vital in record keeping.
Great, thanks, Rob. And I think, because just conscious of time, so what we're going to do is, I think the last section is about preparing for a customs audit. Everyone's going to get a copy of these slides, and we ran a webinar on preparing for customs audit last year. So what I'm going to do is we're going to share the slides, obviously, and I'm going to share the recording of that particular webinar in the chat and in the email we send out afterwards, and we're going to use the rest of the time for questions and the remaining polls. I'll just put the first of those polls up now, just asking whether you use any of the customs special procedures mentioned by Rob just now, and you can select multiple options there: return goods relief, either processing, authorized use, temporary admission, and customs warehousing. Rob, a question we had in from Gillian, or Gideon, sorry if I'm pronouncing that wrong, basically asking what documentation is required if dealing with return goods. So if using RGR or just any other way of dealing with return goods, what documentation will you need to keep?
So crucially, if you're adopting that specific customs procedure, the reference to the original export customs declaration, so you'll need access to that, and the supporting commercial evidence that applies to that movement. But where I mentioned the arrangement for goods that are export or moved to the EU prior to January last year, there won't be a customs declaration, so you need the appropriate commercial evidence that can be used to support that in place. So it's fairly limited actually, but that customs declaration is the key bit of evidence there.
Thanks, Rob. I hope that's helpful, Gillian. So another question we had in from Gary and from Sylvia, and a few others have asked it as well. It's basically what happens if intermediaries don't fulfill their obligations, i.e. whether they don't get you the required proof of export, or whether they're just not completing their declarations correctly. What's the best advice to give in that situation? Is there anything you can do to kind of flag that to the intermediary, or flag the intermediary to other traders potentially?
Yeah, I think it goes back to the point about having perhaps not an internal compliance program initially, but having that formalized approach to what service you're expecting, what evidence that you're expecting, and why. So that can all be captured in a more formalized service level agreement, or agree on a kind of set of standard operating procedures, so that when goods are available for collection, for example, there is a specific time frame in which those documents need to be released. Companies may even adopt a process where they collect a deposit to ensure that they have that potential risk of VAT on exports covered by the buyer. Then they understand that they've got to release that evidence to support the UK-based supplier. So that's something that's sometimes adopted, but I think going back to the formalized set of procedures around the movement, releasing documents and specifying which ones you need, as we've discussed today, that's a good place to start.
Thanks, Rob. I'm just going to share the results of that poll. Thank you everyone for answering, as ever, really interesting to see. Over half of you who responded using either inward or outward processing, 42% return goods relief, and you can see the others there as well. Just going to do one last poll while we're doing a couple more questions. This one's going to ask you, how prepared would you feel for a customs audit were one to happen in your business tomorrow? That'd be an interesting one for sure. We had questions from Marta and Lydia around how long evidence or documents should be kept for. I think we've seen a couple of different figures in there depending on whether it's an import-export or what procedure you're using. So could you give a quick overview of the length of time that evidence needs to be kept?
So where there's any implications around VAT, HMRC could potentially look back up to 6 years. So you've got to be able to have access to those up to 6 years. But for specific special customs procedures, the authorizations will detail exactly how long that information needs to be kept for. But it might be less than the 6 years in some cases, but 6 years as far back as HMRC would look.
Thanks, Rob. And a question from Amanda regarding origin. Is it good enough to have a certificate of origin stated on the shipping invoice as evidence of origin when claiming preference, or should we be getting a formal statement from the supplier?
So it can depend on where the goods have come from. If we look at the EU, for example, the Trading Cooperation Agreement relies on a statement of origin included on the commercial invoice that's provided from the supplier. So as long as they've assessed the product's eligibility, they can include that statement. The burden of proof is ultimately on them to have evidence from their suppliers if they've not manufactured the goods. But then that statement of origin would be sufficient for UK importers to claim preferential treatment. Supplier declarations perhaps are the evidence in the background to enable the statements to be added to the commercial invoice.
Thanks, Rob. I'm just sending the YouTube link to the customs audit video in the chat now for anyone who wants to watch back that particular webinar. I'm going to close that poll. Thanks everyone for answering again. Well over half of you are either quite prepared or very prepared, but there is over a quarter of you not feeling prepared. So hopefully this webinar has been helpful, and indeed that YouTube link should hopefully support any preparations you may make, and we'll look to do this as a webinar topic again at some point in the near future, I'm sure. But Rob, if you can move to the last slide, actually, we'll start wrapping things up because we are over the hour mark. So if I'm just, yeah, thank you very much. And again, everyone, we are sending these slides to you, so you will be able to read these back. I think there's one more slide, Rob. But yeah, thank you again, Rob, for the presentation and for answering the questions there. We hope everyone has found that useful. As you can see, it's a huge topic, but it's one that the IOE does continue to provide plenty of support around, whether that's through our training, our consultancy, our lunchtime learning webinars for members, or any of our various other services. We continue to provide a range of support and information around the latest pressing issues in international trade, whether that be Brexit, the pandemic, or the impact of Russia's invasion of Ukraine for businesses. Indeed, we ran a sanctions webinar recently, which you should definitely watch if you are impacted. Please visit export.org.uk for more information. But we will be sending you the slides and the recording of today's webinar within the next day or so. If for any reason that doesn't come through, please do get in touch. We can send that to you in a jiffy. But for now, thank you for attending. Please let us know what you thought of the webinar and the exit survey, and we hope you have a great rest of the day. But for now, thanks everyone.